And how's everybody doing today? Can you guys hear me okay? Hopefully. Nobody? No volume? Yes? Okay, cool. Guys make me nervous and you don't answer. How's everyone doing today? You guys feeling good? Did you watch that news this morning? Holy smokes. I don't know about you guys. I was watching the NASDAQ and it went so sideways. I think it was about 10 minutes until I took a trade. Good morning, Cav. Good to see you. News, guys. We don't trade it. Don't care what they say. Doesn't matter. But news can move the market. Just to give you an idea of why every morning I check the news. I'm going to show you guys what it looked like on the S&P when the 8:30 news hit. Here was news, and I don't know. Maybe it's just me, but it's right off of one of our termination conditions. And then it rails all the way up, guys. That was a 25.88. That was about a 65 point move in the S&P as the reaction to news. And there were little fluctuations in there. But it's a tough thing to trade. It's a dangerous thing to trade and way too fast to catch. But knowing when it's going to happen, honestly, it helps you set your schedule for breakfast or when you're going to go refill your coffee. It didn't matter what the core CPI was, didn't matter at all what they said, but the reaction is what we're gauging. So every morning, guys, get in the habit of going to forexfactory.com. Here's a link for you, and take a look at it and make sure that you're not, excuse me, trading into that freight train of emotion, as I like to call it. That's the first thing I do every morning, and then I head over to the education page because this is where all the answers are. This is where everything that I talk about during the day comes from, guys. I don't make anything up. It doesn't do me any good. I'm not that smart. What I can do though, hey, good morning, Jose, is I can find the resources that I need to be successful with the software. And I'm not real good at analogies, but I thought of one this morning, guys. And if you've ever learned to snow ski, and I'm not sure that you guys have, but if you've ever learned to snow ski and did lessons, the first thing that they do, hey, good morning, Derek, is they put you on the bunny slope, is they put you on this almost flat piece of land to teach you the basics, to teach you how to start, to teach you how to stop, to teach you how to turn. And the bunny slope, nobody has ever been doomed to the bunny slope for their whole life. And that the first hour of this classroom, guys, this is your bunny slope. This is giving you some basic foundations so you can really open it up and take care of what you want to take care of and get to where you want to be and find all the trades that you're looking for. But your bunny slope as a brand new user, guys, is the high probability trend trade. And I can't stress enough that this won't be your last trade, but this is a trade that's going to teach you how to read your indicators. This is a trade where each indicator on every chart agrees for the rules of the trade. All your triggers are going to be their strongest. No termination conditions exist. There's no trouble spots between your entry and your target. And this is the one that we focus on in the first hour. This is really the only thing that we talk about for almost an hour straight because the high probability trend trade is only three rules, which allows us to keep it simple. It allows us to keep it focused. And these three rules happen on only two charts, which again keeps us focused, keeps us really dedicated to the best of the best, not going outside, not changing lanes and looking for more, but rather understanding the best, guys. And we use this two chart system because they complement one another. Your large chart, when we're looking for the high probability trend trade, is going to define direction. It's going to define momentum. It's going to define the areas. It's going to give you this huge broad stroke of what's happening in the market. And your first two out of three rules happen on the large chart. And when they're met, you will have the advantage of momentum, of a market that's likely to push in the direction of the trend. And you're also going to have the advantage of a clear path, meaning that there are no trouble spots between your entry and your target. These large chart reads come on one bar, like the most current bar. On the large chart is going to let you know the direction, the momentum, the areas. And then once you have those in place, and once those first two rules are met on the large chart, That's when you can turn your attention to the smaller, faster chart. And this is just a refinement tool. This takes that giant lump of clay and sculpts it into a beautiful entry. Rule number 3 of 3 for the high probability trend trade is designed to get you into the market where it is in fact most likely to continue. And what happens in this one bar on the large chart comes to be in 15 to 30 bars on a smaller, faster chart. And it's that refinement process that gets you the advantage of entering the market where it's most likely to continue. So, hey, good morning, Dwight. So let's bunny slope it in the beginning here, guys. Let's make sure that we're focused on the absolute best of the best. Get to the point to where you're comfortable with the basics, and then it becomes easier to expand outside of it. So 3 rules. Each rule provides an advantage, and it's the accumulation of the 3 advantages that creates a trade. Not the other way around. We don't take a trade hoping that there's momentum, a clear path, and an entry. You will literally have a clear path, entry, and momentum, and that's what's going to get you into the trade. So when we talk about the high probability trend trade, and we're going to talk a lot about it, the reason that I start here is because it will make you a chart reader. It'll get you to the point to where you can look at your indicators and you can understand 3 very key concepts. You'll understand where the market is likely to continue, and that continuation point becomes your entry for the highest probability trend trade. You understand where the market is likely to go, and this is going to help you make intelligent profit target choices as you begin to develop your management plan. And finally, you're going to understand where the market is likely to stop, guys. And these likely to stop areas are what we call termination conditions. When we talk about a clear path between you and your target, it means that we're avoiding likely to stop areas. And these lines on a chart, guys, just like we saw in the S&P this morning, you're going to be able to identify them as places that may reverse the market. It may be one of these divergence highs, but I want you to see how the market stops on lines. And that's really the easiest way to put it. The market stops at lines. The market reverses from lines. The market continues from lines. And you'll be able to identify them not only for potential profit targets as the market moves up, but also just as areas where it's time to sit on your hands and wait for the next best trade. So those likely to stop areas become hugely important to the new user because when they reverse the market, it sets you up for the highest probability trend trade. It puts you in a position to take a trade that typically wins 70 to 80% of the time. And this is the trade that we focus on because this is the trade that builds confidence through the memory of success. And if you spend your first 30 days focused on entering the highest probability trend trade, focus on understanding the advantages of the highest probability trend trade, what it does is it opens countless doors for you to create a plan that suits your needs. So we're going to do that today. And I want you guys to embrace the path. I know that there's some new users in here. SPX Trader, welcome to the room. It's great to see you in here. Who else do I have in here that's new? I'm looking at my names here. I've got them all laid out. Guys, this is your class. This isn't the Mark Novak lecture. This isn't the next gen story time. This is literally your class. And this class becomes amazing when you drive it, when you ask the questions, when you post the pictures. And when you post your trades in class, guys, this is the beginning of becoming a confident trader. Everything that you do, win, lose, or draw, because the idea is that you're not sure whether you're following the rules. You're not sure whether the advantages are present. So you need that feedback, and that's what I'm here for. I am live 15 hours every week. You hit something yesterday and your 13.2 chart won't load up. Is it all gray, DJ? Or is it just completely gone? Cool. So, but you have the workspace open? So here on the software user guide, what you're going to need to do, DJ, is you're going to need to build a new chart. Just build a new 13.2. Are you comfortable building a chart? Yeah. So you need the 5-1 chart as well. So you close them both out. Then I'll tell you what, let me show you the easiest path. If you did that, oh, you have the 5-1, so you need to build the 13 too, yes? Easy peasy. Have you built a chart before? I'm looking for it here in the instructions. No? Ba-ba-ba-ba-ba-ba-bum. Where on earth is my new chart building? I have to talk to John about this. Oh, there it is. All right, so DJ, your task is to build a new chart. And it's really pretty simple. You're going to open up NinjaTrader 8 and you're going to go from the control center, new chart. And then once you build that new chart, it's going to give you a template. Put your, I don't know if it's the S&P or crude oil, but you're going to put your instrument in. You're going to select your 13.2 Renko bars 2023. Days to load will be 10. Make sure that it's a Nexgen Renko bar and you're going to have 13 and 2. And don't worry about any of this. This is all good. You don't have to alter any of it. Um, and then from there, you're just going to be able to load it in. It's really a pretty simple process. Go through it. Give it a go, man. And then if you need help, let me know. And then like Gary said, in the future, if you ever accidentally close out a chart, you hit that red X, just go back and hit, when it asks you to save the workspace, just politely tell it no. I'm not going to save the workspace. And then I did it this morning when I opened up the S&P. I accidentally closed out my 5-1. And I just closed the workspace and didn't save it. So there's your giving you a fish, right? Teaching you to fish. If for some reason you're like me and you're not a huge tech guy, go knock on Jason's door. There's your link to tech support. Put in a ticket and he'll get you squared up. So hopefully that takes care of you, man. Give it a try, though. I think that's something everybody should learn how to do. It's a great way just to get better with the software, more comfortable with the software. All right, guys, so you're going to post trades in class. This is the first step. We want you trading the correct rules. We want you focused on the best of the best. We want you learning to read your indicators. So as you learn to read your indicators, I want you to take pictures of everything. I want you to tell me what you were thinking. And I want you to be able to take pictures and put them in the room. So if you need help with that, I really need you to tell me, hey, Mark, I need help with that. I'm going to show you it's not a difficult task. I had someone that's brand new to Nexgen. Welcome, Craig. He was able to post a room in the picture yesterday. Whoops. And of course, my screencast didn't get it. But what you're going to do is you're going to post a picture and you're going to tell me what you see, what you think, why you did what you did. And then you and I are going to have a conversation about it. So, for example, on this chart, Craig is recognizing that the market is going up and it's going up with momentum. And as the market breaks these areas, because he doesn't want to trade into an area that might hold, he wants to take a pullback to it. Craig executes a really beautiful, beautiful, Craig. I was waiting for you to get here so I could show you this. Momentum style trade, using the momentum of the triggers, using these key Fibonacci areas, allowing them to break, letting the market come back to it. So Craig, I don't know if you know this, but what you did is you took a beautiful momentum trade. Not a high probability trend trade, but an outstanding job of reading your indicators, of understanding direction and momentum and understanding areas that could be problematic, and rather than trading into them, trading from them. So Craig, way to take 4 days worth of lessons and turn it into an outstanding look. Nicely done. But that's what we do, guys, every time. You're going to post a chart. And then we're just going to talk about it. So you have to tell me, what did you think? What did you see? What did you feel? Where was your head, right? Um, and I'm going to give you a picture of how to annotate the chart. Because we use two charts, make sure that you show me both charts. Show me what's happening on the large chart. Show me what's happening on the small chart. Tell me where you got in. Tell me where you got out. Talk about your stop placement. Everything you do and the more information you give me gives you the best private session that you could ever have. You and I are going to speak one-on-one about everything that you do. So that is the first half of becoming a confident trader ASAP. And then the second half is using that spreadsheet that Nexgen provided you. It's in your Nexgen Study Picks folder. I believe it says Nexgen 90-day worksheet. Let me see. Nexgen 90. Yep. Nexgen 90-day tracking. It's right there in your Study Picks plan license agreement. But the first tab on it is a trade journal. So, Craig, once you post that in the room, your job is to go drop it into your trade journal, your spreadsheet, and talk about any feedback that you received, right? And every morning, you're going to come back and you're going to study what you did yesterday. So if I took 5 trades yesterday, I'm going to set aside 5 minutes and I'm going to look at the trades and I'm going to ask myself what worked and what didn't work. Maybe you fought trigger strength. Maybe you traded into one of those termination conditions. Maybe you got in a little soon, or maybe you got out a little too soon. The conversations that we have are designed to move you forward each and every time you post in the room. Ask yourself what didn't work. What felt easy? What felt forced? But this brief study every morning is going to set you up for success. So, Craig, are you comfortable dropping into the spreadsheet? So if I copy the link to your picture, and this is for everybody, here's the first page of my spreadsheet, guys. I'm going to paste the link in there. And what that's going to do is it's going to give me this giant screencast link, which is cool, but it's a little wordy. So with that link on there, I'm going to go to Insert, and I'm going to go to Link over here. And this is going to turn it into a hyperlink. I can paste the address in there, but rather than seeing the whole address, I can put Craig's Long. Oops, and totally mess it up. Same thing. Oops, because I put it in the wrong one. So I can call this Craig's Long, and I'll put it in the right spot there. But now Craig can come back and he can study it tomorrow, and he can go, man, I had momentum and everything was going, and I cleared the areas and I took the pullback, and this was awesome. This worked. This kept me relaxed. I'm going to do this again today. And this is a huge part of the path, guys, is making sure that you're tracking everything that you do so that you can recognize patterns in the market that are bringing you success, so that you can recognize patterns in yourself that might be taking that success away. Our job, my job for the first hour is to teach you the trigger line and Fibonacci rules for when it's okay to trade. And remember, this is a foundation, guys. This is just teaching you to read your indicators so that you can find your plan, so that you can find what works for you. Simulate, get on that fake money and just go. Every time you think there's a trade, take it right on your chart, post it in the room. I'm going to tell you right now from history and from experience, guys, the people that post the most in the room, the people that ask the most questions, that show me the most pictures, these are the people that are hitting their goals every day because they don't guess, they don't hope, they're not wallflowers. They're literally saying, you know what, this is my classroom. I need the feedback I'm going to post in the room. Embrace that because we don't want you practicing the wrong trades. We want to make sure that advantages are present every time you're trading, that there is a statistical advantage. We're going to simplify heavily. We're going to focus on a high probability trend trade. Your job is to keep taking pictures so that the looks become easy, and that's the second half of the spreadsheet. Your favorite looks should be right in here. Every time your trade, your favorite trade, or rules met trade comes in, you're going to create a trading plan with your personal trade looks. I understand that it takes a while to get those repetitions, so I've given you about 270 to 275 pictures of client trades, people that are using the software, that are doing great things with the advantages present. Go through and study these, and if you have a question about them, post it in the room. Take a picture. Hey, Mark, I was looking at this picture, and I'm trying to figure it out. Whoops, the site can't be reached. We're having some screencast issues. Why did Craig go from the yellow box, and why didn't he jump in all the way up here? And what we can do is we'll talk about Craig's picture like Craig doesn't even exist, like it was your picture with your questions. So post in the room lots. And we're going to do this today, guys. This is our plan. I'm going to talk about the rules. You're going to simulate, post in the room, ask a million questions, triple dog dare you. But we're going to focus on advantages. We're going to make it so you guys can understand, recognize The advantage of momentum, a clear path and an entry area so that you can be set up to take the entry for the highest probability trend trade. And it all starts with the large chart. And it starts with strong triggers on the large chart. And when we have strong triggers, guys, this is the advantage of momentum. So let's keep it simple. If the background on your large chart is green, it's the only way that you can have strong triggers to the upside. And if the background on your chart is red, it's the only way you can have strong triggers to the downside. One of the big advantages you can give yourself is background, small triggers, the solid lines, and large triggers, the dashed lines, are all the same color. When they are, that's the beginning of odds favorable momentum. But what we're looking for is when these small triggers break away from and create separation between themselves and the large. It's this gap in between small and large triggers, like scissors that have just opened, ready to cut. This is what we call a strong trigger look. And strong triggers mean that this is a market that's likely to continue in the direction of the trend. In a downtrend, your small triggers, your large triggers, and your background are all the same color. The separation between small and large lets me know that the odds are favorable for the market to continue in the direction of the trend. And guys, this is a pretty easy first rule. Is everybody comfortable with this? You're taking your trigger lines and just looking for a gap. That's all it is. When you have it, the odds are favorable. If the gap closes, if the scissors close, if those small triggers work their way inside of the large, well, now we have weak triggers, the exact opposite of strong, which means that your advantage of momentum goes away. Anything can happen up or down. And guys, this is probably the easiest lesson for new users. So let's go see if we can find an example of it in the live market where we can see odds favorable momentum and take that opportunity to understand what the market is doing. So on the S&P right now, my large triggers are up and my small triggers are down. Not at all odds favorable momentum, but if you look at the gap between the small and the large here, look at how the market pushed up until the smalls turned against it. Crude oil doesn't have it. Once again, we're in this indecision phase. And the NASDAQ has small triggers above the large, and the large are wide, and there's your separation. And that market appears to be pushing to the upside. Odds favorable momentum, and I see it on the most current bar. Is everybody good with that? Can you give me a Y in the room? Strong trigger lines is just the separation between the two triggers. It has nothing to do with areas, has nothing to do with price, has everything to do 100% with this look right here. And when you have this look, the market is likely to continue in the direction of the trend. So when you have odds favorable, the market tends to push down in a downtrend. When you get to those anything can happen triggers, those weekend triggers, notice that it precedes a reversal. The reversal gives me odds favorable. And guys, this tail on a large chart is a pullback on a smaller, faster chart. That's your refinement tool. When you have odds favorable momentum, you're going to be able to pinpoint exactly where this tail is most likely to happen. That becomes your entry for the highest probability trend trade. And we're going to talk about the recipe for it. And we don't trade tails, but what we can do is we can go back and we can look at these tails with odds favorable momentum and see if an entry was available. It helps you in reviewing the day. It helps you in reviewing the lessons. Odds favorable carries you all the way up to those anything can happen. Anything can happen gives me a reversal. Reversal gives me odds favorable. There's one of those tails again. This becomes the entry where you've pinpointed where the market is likely to continue. And you carry it down. There's probably a fib here. And then we get into a transition period, guys. Then we get into, I want you to see how the large are down and the small are up. They don't agree. They're not the same color. I can't have strong trigger lines. If the background is green and my triggers are red, I can't have strong trigger lines because it's imperative that everything is wide, angled in the direction of the trend and the same color. This is where the buyers and sellers are fighting. This is where the buyers and sellers are, someone's trying to take control. We just don't know who's going to win. Next-gen users have the amazing advantage. You know to sit on your hands because rule number one isn't met. You can wait for the fight to end, wait for the odds favorable momentum, and then you have the advantage of trading with the market, trading in the direction, trading with the momentum, rather than hoping, trying to predict what the market's going to do. So, guys, that's rule number one. It happens on the large chart. The large chart is defining direction through the color of the background, green for up, red for down. It's defining the momentum through strong trigger lines. And then once we have those strong trigger lines, it's really important that we don't run into those termination conditions, those areas likely to stop the market, because when they're false, when there are none present, we have a clear path. And the recipe for recognizing termination conditions really isn't a tough one. And I'm going to show you a termination condition textbook right here. If price, meaning these dynamic Renko bars, comes down and reaches an area, whether it is Fibonacci supports, Fibonacci resistance, whoops, wrong one, yellow one-to-ones, divergence highs, divergence lows, if price reaches this area, does everybody see how the price bars came down and smacked right into Fibonacci support? I have a downtrend, right? I have smalls below the large. But when price reaches this key Fibonacci area, all I have to do is ask myself, where are my trigger lines? And if the trigger lines remain above support, no more short trades into the area. We're not looking for opportunities to the downside because we've reached an area that may stop the market, that may reverse the market, that may create indecision. We've reached an area that takes away our advantage of a clear path. And then on that same token, let's take a look. Price gets to Fibonacci resistance, the triggers remain below, and it gives us a push. This was news. Price reaches resistance, the triggers remain below, no trades. But when both of your trigger lines get above resistance, it behaves as support. And guys, this is where Nexgen users can look for an opportunity. Craig, this is your trade on a higher chart, higher time frame. No triggers through, no trade. Let small and large get to the other side. Resistance behaves as support, and off you go to the upside. Same thing is true here. And then once again, price reaches support. Absolutely no triggers get below. We're not looking for short trades. And guys, this is all during news. All of this happened in a matter of seconds. But I want you to see what started the move to the upside. Price reached Fibonacci support even with odds favorable momentum. And when it did, not one of the trigger lines broke through the area. And let's backpedal. And I want you to see exactly what happened in that move off of the key Fibonacci area. From fib to fib. And in the NASDAQ, this is a 122-point move. So the idea of termination conditions is simply to be able to understand when you shouldn't be trading into an area, and then more importantly, understanding that these termination conditions, when they reverse the market, they set you up for that highest probability trend trade. So price reaches an area, no triggers, break, no trade. It really is that easy. When both the small and the large triggers get to the other side of support or resistance, the area is now broken. So I've got a simple picture for you that identifies whether or not you have a clear path. And I'm going to say it as many times as I can, guys. If price reaches the area, if those dynamic Renko bars reach the area and none of the trigger lines break, just sit on your hands. Wait. You don't know what's going to happen. You're not in control of the market, but you do know that you don't have a clear path. We saw the lack of a clear path reverse the market for 121 points. The potential is there. If you're looking for the long trade, let the small and the large triggers get above the area if it's resistance, get below the area if it's support, and then you have a clear path. Notice that resistance becomes support. Notice that I have odds favorable momentum. There's one of those tails. This is where Nexgen users pinpointed the best of the best entry. Is everybody great with this? Are we good with the idea? Let me give you the recipe for highs. Price reaches a divergence high. The triggers remain below. It's a termination, no long trades. Price reaches resistance. The trigger lines remain below. No long trades. Price reaches yellow 1-to-1s, triggers remain below. No long trades, guys. It all begins with price reaches. And then, of course, the other side of highs have to be lows, right? Price reaches 1-to-1s. None of the trigger lines break. No short trades. Support, no trigger lines break. No short trades. Divergence low, no trigger lines break. No short trades. Guys, it's this easy to recognize termination conditions. You just really have to go back and study them a little bit and take a look. And we can do that live market, right? I can go back and I can look for termination conditions. I can look for divergence highs with no triggers and look at the push down. Let's go to another market. Divergence high, smalls broke, large didn't. Divergence high, triggers remain below. No long trades. Just sitting on our hands, waiting. No momentum right at the key Fibonacci areas, pushing it all the way back to Fibonacci support. Here's a beautiful example of resistance breaking and behaving as support. Guys, termination conditions are designed to not only keep you out of trades when that advantage is gone, but it's also designed to set you up for the highest probability trend trade that you can take. So when a termination condition creates a full reversal, when this pivot stop out, divergence low is reached, triggers remain above, when this termination creates a full reversal to the upside, we're going to call this a strong bottom. And a strong bottom is the precursor for the highest probability trend trade that you can take. When you see it at a high, when this termination condition creates that reversal in the market and gives you odds favorable momentum. Guys, this is the best of the best. There's one of those tails. This is the highest probability trend trade that you can take, guys. This is the one that typically wins 70 to 80% of the time. And this is my picture reminding you that 90% of your day is spent reading your charts. 90% of your day is waiting for advantages. And even with odds favorable momentum, when this market hits these yellow 1-to-1s, Nexgen users asked themselves, they said, where are my trigger lines? And when all of them remained above, there wasn't one of you in this room that didn't know to stop going short, that didn't know to take profits, that didn't know that you'd reached an area that may create a bounce, a reversal, an untradeable situation. And that's exactly what this did. From support, the buyers fought back. Decisions are made. Sellers take profits. Buyers enter positions. And sometimes they can't decide who's going to win. So we went from buyers, the sellers pushed back, the buyers decided to fight, the sellers pushed back, the buyers fought again. Guys, this is that 90% of your chart reading. This is you staying out of the market while they battle in moments of indecision because you no longer have those advantages. Ultimately, the market reverses. The momentum becomes advantageous. Small and large get to the other side of the area. And this is your 10%. This is the high probability trend trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. And this is the trade that more often than not rockets to the next key Fibonacci area. Is everybody comfortable with the idea that if you reach an area and the triggers don't break, sit on your hands for a second, guys? Give me a why, especially my new users. What you're doing is you're defining one of the most powerful tools that Nexgen has, Fibonacci, understanding where the market is likely to stop. Guys, this is huge. Sit on your hands. Amen. Sometimes the market may reverse from nowhere, guys. Sometimes you may have a clear path and that just goes up. And sometimes you may have a clear path and odds favorable and it just goes down. So I'm going to give you one more termination condition. Remember, the first one required price to reach an area. It's a large chart termination. It's defining the areas where decisions are being made. This next termination condition uses your smaller chart. It uses your refinement chart. And on your smaller chart, we can use the idea of divergence, that loss of momentum in the market. When we see three divergences in the same location, divergence is identified through this negative number, through the cyan line that prints from a low. It's identified by that negative number, through that that magenta line that prints from a high. And what divergence means to the next gen user is price came down and formed a pivot, meaning it went from down to up, or meaning it went from up to down. When this pivot is formed, your software begins to run calculations with momentum indicators. And if for some reason momentum didn't keep up with price, whether it's to the downside or whether it's to the upside, this divergence line prints. So all divergence is a loss of momentum. That's all it means. Don't overthink it. Loss of momentum. It's calculated for you. It's printed for you. You don't have to do the math like you did in the old days. When I get 3 losses of momentum in the same price range, it may terminate the trend, guys. This smaller, faster chart is letting me know that change is happening that I can't see on that bigger, slower chart. I'll see it at a low, I'll see it at a high. These 3 divergences become more powerful when my small triggers work their way inside of the large triggers. You'll remember from the momentum lesson. Smalls inside a large mean anything can happen up or down. We've given up the advantage of momentum visually through the trigger lines and through 3 losses of momentum. And then it becomes more powerful if your final pivot from a low or your final pivot from a high can't match the price of the previous. So a higher pivot from a low or a lower pivot from a high creates a little head and shoulders pattern there, guys, and it just adds fuel to the fire. But you're going to see this look, these 3 divergences, at times when you won't see the change happening on your large chart. You may have odds favorable momentum to the upside. You may have a clear path to the downside. But at those areas, these 3 divergences let you know maybe don't take that last trade. Or if you're in a trade, it lets you know that it's time to exit. It's time to manage out because the conditions are changing, guys. So these are your termination conditions. Termination conditions happen on the large chart when you're relaying areas and trigger lines. Price reaches, don't break, don't do anything. You will see it on a smaller, faster chart in the form of 3 divergences. And I think it's a great lesson for you to scroll back on a chart and just kind of recognize over and over, price reaches support with weak triggers, that reversal begins the move to the next key area. Price reaches the divergence low, even with odds favorable momentum, it gives us a push up. Trigger lines can't break resistance, sure enough it goes down. There's a pullback to support with everything above. You can even identify markets that are consolidating a little bit in between those key Fibonacci areas. Support holds 3 times. It sets off the reversal. Support to the tick, resistance almost to the tick. Guys, go back and develop trust in these termination conditions. Go back and develop a respect for these areas that are likely to stop the market, because what I find is that most new users trade into them, and they trade into them with very poor results. But once we have strong triggers, the advantage of momentum on the large chart, once we have a clear path, the advantage of no termination conditions on the large chart, we're going to refine. We're going to take that 1 bar that gave us that great information, and we're going to break it down into 15 to 30 bars. And we're going to do that on the smaller, faster chart. We're going to refine. Remember, we talked about those tails. We don't trade the tails. This is where the magic of rule number 3 comes in, guys. We're going to use a limit order to buy or sell a retracement, a tiny pushback in price counter to everything that the large chart says. We're going to buy or sell that pullback at an area, meaning fibs, mid-bands, or yellow 1-to-1s, and we're going to make sure that they're inside what we call favorable large triggers on a smaller, faster chart. We don't trade tails, but this pullback to an area inside of favorable large triggers is going to help me define exactly where this tail is most likely to happen. So what we're going to do is we're going to use the small chart, and I'm going to go to the instructions. Remember, everything is here for you. When the large chart says up, when the large chart says strength, when the large chart says clear path, this will be the look on your small chart, guys. This is your smaller, faster chart. Everything says up. My large triggers are up, my synthetic triggers are up, My small triggers are up. My trend is everything is up. And this is where I'm making the decision that it's time to look for a trade. So I'm going to look for my large and my synthetic, my favorable large triggers. And I'm going to look for the areas that may fall within them. I'm looking for Fibonacci support in this case. Yellow 1-to-1s. I'm looking for a mid band. And this is just all I'm doing. I'm not taking a trade yet because rule number 3 says that I'm going to use a limit order to buy or sell a pullback, which is a small retracement in price. And I'm going to buy that pullback at an area inside of favorable large triggers, which means that I have to wait for the pullback. And the pullback starts with a reversal bar. At the time of this reversal bar, I'm going to once again identify my areas, fibs, mid bands, yellow 1-to-1s, and they need to be inside, enveloped by these large and synthetic triggers. Um, this creates my window of opportunity. For a long trade, your window of opportunity extends from the highest point of support to the lowest point of support, closest to price, furthest from price, inside of favorable large triggers. Your job as a new user, as a Nexgen user, as a high probability trend trader, is to activate a limit order right at the top of that window, a tick or two above the highest point of support, and hope that that retracement gets there. And if that retracement gets to the area inside of favorable large triggers, guys, you're in a long trade. You are in a long position at 79.21. And here's the best part is you have the advantage of momentum because your large chart had strong triggers. You have the advantage of a clear path, means that there's nothing to create a bounce on the large chart with all that momentum. And now you have the advantage of entering the market where it's most likely to continue at that highest point of support inside of favorable large triggers. So to go through the process one more time, large chart leads the way. Large chart had strong triggers. Large chart had no termination conditions. This is why I look to the small for entry. Large chart leads the way. On the small chart, I wait for the reversal bar. The reversal bar signifies the beginning of the pullback. At the time of the reversal bar, I'm going to look from the top of my triggers to the bottom of my triggers, guys. And this is a pretty big space. This is not where the market is likely to continue. The market is likely to continue from the highest point of support, which is the midband, to the lowest point of support, which happens to be these yellow 1-to-1s. This white box shows me where the market is most likely to bounce. These areas create a point of ricochet for the market to continue in the direction of the trend with the momentum. And if price reaches the highest point of support, a tick or two above, I'm in a long trade with all those advantages. I'm in the market. I'm committed 100%. We formed a window, which means that the market may push to the bottom of the window. It may go to that lowest point of support, which is cool. You're going to see some negative numbers on your screen. It's going to make you a little nervous, but the reality is we're still rules met. We're still in that area where the market is likely to continue. And this is one of the advantages that the methodology presents, guys, is if we know where the market is likely to continue, then we have a very clear understanding of where it shouldn't go if we want to stay in this trade. And about 4 or 5 ticks outside of the window of opportunity, you're going to place a protective stop. And there is going to be a time where that stop gets hit. Because anything, you math people will understand this, anything that wins 70 to 80% of the time, I think I turned my number lock off. There we go. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. This is a cost of doing business. The market is wrong. However you want to say it to make you feel better about it, you will take losers. For every 10 trades, I want you to be ready to lose 2 or 3 of them. The thing is you don't get to pick which 2 or 3, but what you will know is that every time the rules are met, every time you have odds favorable momentum, a clear path, and an entry area, You've taken a trade that typically wins 70 to 80% of the time. You're willing to take this trade because of your study, because of your repetition, because of your questions. And guys, this will become a trade that you will absolutely positively never miss because you know that 70 to 80% of the time, this is your result. And guys, this is your highest probability trend trade. And if you stole the spreadsheet that I gave you guys, we run through it here too. Rules are met on the large chart. This is going the other direction because we can make money both ways. One of my favorite things about futures markets. When the smalls are below the large, I have odds favorable momentum. When the small and large are below support, I have a clear path that behaves as resistance, and I have room to my next target. So I wait for the reversal bar. And at the time of the reversal bar on my small chart, I look from the bottom of my triggers to the top of my triggers. This isn't my window of opportunity. This is where I'm looking for areas, a place for the market to bounce. I'm looking for red Fibonacci resistance, magenta midbands. I'm looking for yellow one-to-ones. And my window of opportunity is from the lowest point of resistance, whoops, to the highest point of resistance inside of those favorable large triggers. I'm going to activate a limit order, a tick or two below that lowest point of resistance. This is getting me into the market where the market is most likely to continue. I'm in at the lowest point because if you remember, my large chart was screaming to the downside. My large chart had absolutely nothing in the way. And if that retracement comes back to my limit order, I'm in a short trade with odds favorable momentum, with no termination conditions, and with room to get to the next target. So I'm going to give you guys my spreadsheet in the room one more time. I want you to steal this, please, guys. I want you to take my spreadsheet, and I want you to go through the sequence a couple times. I want you to go through the pictures a few times. But I want you to focus on this high probability trend trade. And if you focus on it for the first 30 days, if you go back and circle tails on your large chart, when there is momentum, when there is a clear path, see if it lines up with an area inside of favorable large triggers. If it does, steal that picture, put it into your spreadsheet. This is the look that I'm looking for, whoops, to get me in the market. What did I do? And you'll see it here. If you start clicking on links, you'll see odds favorable momentum, no termination conditions. There's a pullback to resistance inside of favorable large triggers. This is Gary rocking it out in September of 2022. And then if we click on a different one, everything says down, the momentum is strongest. There's a pullback to resistance inside of favorable large triggers. Once again, what we're doing is we're identifying advantages. Paul says ES looks good right now. We're identifying odds favorable momentum. We have a clear path. We have room to the target. And I'm waiting for a reversal bar. And if I get a reversal bar, my highest point of support is 44.94.75. My lowest point of support is 44.93.65, which means when I'm comfortable, even before a reversal bar, I know exactly where my highest point of support is. I know exactly where I want to enter this trade if I get a pullback. And if it reaches 4,500 before it comes back for me, well, it just kind of turns out that it wasn't my trade. Thank you for that, Paul. Guys, give me a Y in the room if you're with me. Odds favorable, haven't reached the area, areas of support, and then once we get to that fib, guys, it's party over. Now we no longer have room to the target because the target has been reached. And sometimes this is going to happen. And it may be a little frustrating to you in the beginning, but you'll realize that the market does this all day, guys. And if you come back and you have odds favorable and the path is clear and you circle a tail on your large chart, what's it look like on the small chart? Well, it's a pullback to resistance, but it's not inside of favorable large triggers, and this may not be your trade. It'll probably be your trade eventually, but not yet because they're not inside of the triggers. And if we scroll back again, there's all that news. And let's take one right in the middle of news. Right when the triggers get above resistance, it behaves as support. This is at 8:30 a.m., guys, right in the middle of a crazy newscast, and I want you to see something pretty cool. There's some news indecision. That's 1 second after the lead. But do you see how it pulls back to support inside of favorable large triggers? Resistance breaks. Guys, this is in the middle of a 55-point run. The rules were still true. And off it goes. And if you scroll back again, this goes into yesterday. You can go back 10 days. Let's go to 1308. Is everybody with me? Guys, all I'm doing now is I'm showing you how to study, how to go back, pull back to resistance inside of favorable large triggers. It does it again. And then it goes down. Everything says up. The momentum's the strongest. The path is clear at 11:13. I think you guys took this in class. There's your first pullback to support inside of favorable large triggers. There's your second. There's your third. And off it goes. So guys, we're going to just do this every day. Rinse and repeat. You now have rules for taking a trade. You now know the Fibonacci rules for when it's okay to trade. Now it's time to practice them, to simulate them, to post in the room every time you see them, to go back historically and develop trust in the methodology. Don't practice the wrong trades. Simplify. Stay focused on that high probability trend trade. The absolute best of the best. And I'm going to give you a checklist to do that, to police yourself. I'm going to give you rules to write on the chart. Is the market coming from a good top or bottom? Was there a termination that created a full reversal? If there was, outstanding. We start looking at that 70-80% potential. If there wasn't, I have not, Jose. You can take the trade, but you're going to use those divergences on the smaller, faster chart to help you manage it. This reminds you about momentum, a clear path, and an area inside of favorable large triggers. And guys, I've never had anybody in the history of this checklist do worse than 70% winners, ever. Maybe a great way to start to build that foundation. And then if you're like me and you're a visual learner, this is what a termination that creates a full reversal looks like. Would it really, Jose? I'm going to have to watch it. Here's your odds favorable momentum. There's those tails. Here's your weak triggers preceding a reversal. No triggers, no clear path. Both triggers, the path is clear. And then guys, this is your journey into medium probability trades. When you have trigger lines breaking areas with odds favorable momentum, fibs break all the time with momentum. This will be the first trade that you take outside of that highest probability. This is what we call a 50-50 trade, where 50% of your triggers break, but 50 do not. This 50-50 trade is an area with the potential to break, but it's not a clear path because it's not broken. I'm going to give you a set of rules for that trade as well. And then finally, just defining the window of opportunity where the market is most likely to continue. If you give me 2 solid weeks of looking for nothing but entries, don't worry about profits. Don't worry about anything other than getting into the market where the market is most likely to continue, guys. Beautiful entries, rules-based entries create manageable trades. So I'm going to give you this one as well. This checklist is for you visual guys. Study it each and every morning. Print this one out. Put it on your desktop. Grab your favorite crayon and check yourself every time with it. And then finally, I had somebody tell me once, if you don't have a written plan, Mark, you don't have a plan. And what happens is if you don't have a plan, you are very open to emotion. You're very open to opinion. You're very open to trading what you want to happen instead of what is happening. So I'm providing you what's called the KISS plan. Copyright Bobby T. Keep it simple, sunshine, because I'm not allowed to say stupid. Keep it simple, sunshine. Don't make it complicated. Focus on the best. And this plan is a stepping stone in your journey. Guys, remember, we just spent an hour on the bunny slope. We learned how to snowplow. We learned how to turn. We learned how to get it on and off of the what do you call that thing? The ski lift. We're just on the bunny slope and we're building a foundation so that we can attack the mountain. We're pouring concrete so we can build a skyscraper. Whatever analogy jives with you, right? We're studying biology 101 so eventually one day we can be a surgeon. It's designed to optimize your chances of success with the high probability trend trade or the 50-50 trade as a new user, guys. That's all this is. This is a plan that's designed to help you win more than you lose. This is a plan that's designed to give you a statistical advantage every time you take a trade. This is a plan that's designed to keep you focused on understanding advantages as you learn to read the indicators. Through simulation, study, class feedback, and continuous practice, guys, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's AI coming through and telling you, guys, when you can read your charts, you're going to build your own plan. When you begin to recognize patterns, you're going to begin to trade those patterns because they're comfortable to you. And what you're going to see in this room and what you're going to see in the traders chat, the owner's room over there, is that there are people that take trades that have absolutely nothing to do with high probability trend trades. Miss Safia is a great example. I'm surprised when she takes a high probability trend trade because that's not her thing. Her ability to read charts, her last year of study, all of her focus and the mentorship has come together for her to create a plan that uses advantages, but uses them in a way that appeal to her. And that's exactly the goal for you, is break away from the foundation once you're good at it and look for what suits you. And the simple plan for consistency. I can't stress this enough. Never fight the large chart direction or triggers ever. As a brand new user, this is a recipe for disaster. As soon as you start ditching momentum, as soon as you start ditching direction, the opinions come in strong, guys. So as a brand new user, stay focused. Don't fight strong triggers. Don't fight the direction. If it's green, go up. If it's red, go down. Keep it simple. And define your entry. Take 20 days to define your entry. Take at least 100 pictures of great entries through study. Burn them to memory so that they become easy. And then once you enter, you have to do something with them, right? Entering the market is only half of what we do. The other half is learning to manage it, using your chart reading to be able to manage that great entry. So the same way that your entry is mechanical, it's checklist based. There's really no room for opinion. It's really more like, if this happened, well, then I have to do this. We're going to do the same thing with management, and this pragmatic approach tends to be the most straightforward approach for new users. And everything begins with an entry. So take a couple weeks, guys. Learn how to get in at the area inside of favorable large triggers. And when you do, you'll understand where the market shouldn't go. You'll understand where your stop placement should be. It's typically 12 to 14 ticks in a futures market. Um, Most people have their initial stop set at 12 ticks. That gives you reaction time to put it where the market shouldn't go. And if you get into the best spot and your stops where the market shouldn't go, you're either going to get stopped out, and guys, 20 to 30% of the time, I want you to be ready for it. It's a normal part, a natural part of a positive equity curve. Or that market, because of the momentum, because of the clear path, is going to bless you with a reversal bar. And when you get this reversal bar, if I enter at the market, then my stop is here. If the market gives me a reversal bar, then I'll reduce my risk a couple ticks above it, a couple ticks below it. I'm managing my risk before I ever manage my profits. And then from here, there's nothing to do. I'm either going to get stopped out for a smaller loss, or it's going to hit my first target. And my first target is $100. Not one of you in this room would be upset with me if I walked up to you and said, "Hey, Paul, here's $100, brother. Enjoy it." You'd be like, "Hell yeah, $100, right?" For whatever reason, day traders hate $100. It doesn't feel like enough money to them. Guys, this $100 target has nothing to do with your long-term success. It has everything to do with creating confidence through the memory of success. When you make $100, next or Ninja Trader tells you profit target reached. It feels good. Serotonin flows, the dopamine's kicking, right? And you got paid, and they can't take that from you. And guys, this feels great, and this makes your brain want to continue to catch these great entries, to take these amazing trades. You're also going to move your stop to break even, which means that not only did you get paid, but you have no risk on the trade, which makes it easier to hold for the second target. It makes it easier for you to embrace the idea that it was odds favorable momentum and a clear path that had you looking for an entry in the first place. Your break even stop is going to get hit a lot as a new user. You're going to take a lot of $100 trades with a break even stop, and that's okay because remember, all you're doing right now is learning how to read your indicators, learning how to manage your trades, learning when it's appropriate to hold for bigger moves, when it's appropriate to get out for shorter moves. So $100, go break even, and you're either going to have that break even stop or you're going to hit that $200 target on your second contract. And guys, that's a $300 trade. 300 doesn't seem like a lot, right? But let's take a $300 trade and put it on a four lot, same management plan. Now it's a $400 trade, right? I'm sorry, a $600 trade. And then we take that $600 trade and we do the same thing on a four lot, and now it's a $900 trade or a six lot. And we're not looking for more trades. What we're doing is we're taking the best trade with a statistical advantage, and we'll begin to ramp up our contracts a little bit, right? And $900 a day, guys, if you can pull that off, and that's a pretty good goal for a six lot, that's a $4,500 week, which means that you are at about an $18,000 month, which puts you just south of $250,000 at the end of the year. And it all stems from the best of the best, from learning to enter the market at the right spot, from learning how to get into the market, and then ultimately learn how to read your indicators so that you can manage. And this is another part of what we do. Every time you post in the room, it creates a lesson. Every great entry has a management lesson, right? So if initially I'd make my $300, I can go back and analyze the chart after the fact and say, well, look at these strong triggers. Look at that clear path. Maybe I should hold for bigger moves when I have this look, right? Um, and that's exactly what this person did. I don't remember who this was, but with odds favorable momentum and a clear path and nothing in the way, their entry was perfect. And their exit looked good, right? They made money, but look at all the potential with that momentum to carry them down to the next key Fibonacci area. And instead of making that was about $350, they had the potential for 10 points, which is about $500, which is a big difference when you add that up over the days. So focus on your entries, get into the market at the right spot. Let's learn how to manage it. Guys, stick to the plan initially. And the other side of this is if you're not where you want to be, and I say this every day, if you are not where you want to be as a trader yet, if you are not at that point where you're winning more than you're losing, if you're not at that point where you're consistent, it's okay to take a deep breath and a step back to this simple plan, to focus on this plan, because I'm telling you right now, I've never had anybody stick to it to the letter and not be a successful trader. And I've seen a lot of you guys in this room get funded on those prop firms inside of your first 30 days with Nexgen by keeping it simple. So that's my first hour, ladies and gentlemen. Welcome to Nexgen. We now know the rules. Your job is to simulate. Let's simplify. And let's see what happens. Let's watch the market. Let's look at the live market. Look at rule number 2 on crude oil. It says don't go long or short, right? How many of you get caught in consolidation? Look at that. Next-gen indicators, your rules just defined exactly where the market has to break out of if you want to look for the next trade. No reason to get caught in here, guys. No reason at all to give your money to a market that's caught in consolidation. And then once again, NASDAQ into Fibonacci resistance. Absolutely none of the trigger lines broke. But if we back up a little bit, let's do the study, guys. Small's breaking above the large. The path is clear. If I circle a tail, it's support inside of favorable large triggers, darn near to the tick. This becomes your best of the best, guys. This is where next-gen users make money. Did we get one here too at 952? Everything says up. The triggers are strong. It hasn't touched that pink line. There's a tail. There's support inside of favorable large triggers. and it takes you right up to the termination condition. So is everybody comfortable, at least in a basic stance? High probability trend trade is your beginning. It's your foundation. And I'm telling you right now, if you're an adrenaline junkie, if you want more trades, if you need more trades, if you want to do what you're seeing the people that are more advanced doing, take this foundation and understand these basics. Get to the point to where you're a chart reader. And then my brother does seminars. My brother takes his 27 years and lays it out into stuff that is unbelievable to catch bigger moves, to catch more moves, to catch better moves. All we're doing here in class is laying a foundation. And that's my first hour. It's the same first hour every day because I believe wholeheartedly in what I teach. It is 95% of what I trade when I trade the live market, and it creates advantages. It turns you into a chart reader, and eventually your chart reading begins to create expectations. When the termination does create the reversal and it does push it through, some of you find opportunities into these areas. Some of you will find trades that are a little outside of high probability, but still amazing trades. So I'm going to leave you with the S&P, guys. I'm going to take 5 minutes. When I come back, we're going to look at your charts, and we're going to talk about three things on every chart. We're going to talk about momentum. We're going to talk about termination conditions. And I want you to see what Paul did here. Paul took a picture that said, I have a strong trigger look all the way to the bottom, but price reached support and none of my trigger lines broke. Notice the big annotation that he put on there. Termination conditions likely to stop the market, no trading. That was the S&P at 1968. Nope, that was gold, sorry. And look at the reaction straight through his area of resistance inside of favorable large triggers. I always say that the hardest thing as a trader is doing absolutely nothing when there's nothing to do. But how much money is this going to save you a year? How many bad trades is this going to keep you out of and setting you up for the good trades? Paul, did you catch a long after that by any chance on gold? Did that termination create a full reversal? No. And then here we go again, guys. Weaker triggers, weaker triggers. Absolutely no areas inside of favorable large triggers. Not a high probability trend trade. No reason to sell or to buy the mid band. And I hope that you're seeing this, guys, because I don't only want to show you winners today. I want to show you the avoidance of losers, because when you win $1,000 but you give away 1,500 taking iffy trades, you're still down money, right? It erases all of your great loser or all of your great winners. But if you avoid those ones that don't fit the rules, it lets those winners stay winners. So, guys, I'm going to take a few minutes, and when I come back, you're feeling like you want to pull the trigger this morning? I have mornings like that where I just want to be in a trade. I want that excitement. I want that adrenaline. And man, it's such a dangerous road for me to go down. So guys, I'm going to take 5 minutes. When I come back, we're going to start looking at your charts. We're going to start looking at everything that you guys have done. I'm not going to grade you on whether it was a high probability trend trade or not. I'm not going to judge you on whether or not you followed rules. We're simply going to use each and every chart as an opportunity to grow a little bit. We're going to look at the three advantages. We're going to talk about them. We're going to look at entries. We're going to look at exits. And my goal for you is every time you post in the room that we can take what you're doing and maybe do it just a little bit better. Or if you've done it as well as I know how, let's just virtual high five, give you a little attaboy and a good game, and look for the next trade. So price reached support. Absolutely no trigger lines broke through. Hope nobody wanted to go short into that. I'll be back in 5, guys. All right, y'all, let's get into that second hour. Good first hour. I hope you learned something. If you have questions, if you're being shy and it takes 30 minutes for it to kick in, and you're like, man, I could use a little help on termination conditions, make sure that you raise your hand. Make sure that you post it in the room, guys. I can't stress enough. This class is designed for you guys. This class is designed for you guys to get better at what you're doing, and the more questions that you ask, the easier it becomes for you to get to where you want to be. Just so that you know, I'm going to scroll up to the very top like that. I'm going to start finding the posts that you guys have made. And then I have to scroll back down to get to the current chat. So if I miss your question, um, please be patient. If I miss your chart, let me know. But I'm going to go back and forth a couple times, and we're just going to go back and forth to what we see here. And we're going to start again with Craig because I used him as an example of how to post a picture. But I want to talk about just what a great opportunity this is, getting on the path. And when I look at Craig's chart, there's a couple things that I notice. I notice that everything is green, and he wants to go long. That for the new users is a huge win, not fighting direction. He's also got strong triggers. He's got odds favorable momentum. The smalls are above the large are wide, everything's angled in the direction of the trend. And if I go back to that real simple idea, what is momentum, right? What's it do? It's likely to push the market in the direction of the trend. Craig's nailed it. He's got direction, he's got momentum. And then we've got this area, 78.42, that has the potential to break. I know that it's only the potential because the small triggers are above the areas, but the large triggers are still below, which means that it's not guaranteed to break, but it has the potential because of the moment. And then I think, and I'm not 100% sure, Craig, that you knew how brilliant this was when you did it. Craig allows price to get above the trouble area, to say, hey, it's gone beyond the decision making. And then he knows from just termination conditions 101 that there's that pullback to support. Resistance becomes support. He enters the market and he takes it off to the distance. And this is not a high probability trend trade. This is what we call a momentum trade. This is relying on the momentum of the large chart. Um, and the big trigger is what gave you a fighting chance on this one for sure. And if you look at it, it pulls right back to the support right at the top of the triggers. It's just a tiny little pullback because of all the momentum. It's a beautiful trade. And yeah, big game, it's hard to learn if you're not here, brother. I didn't learn anything between the hours of 10 p.m. and 6 a.m. last night. So this is great. And you get in, you can use the reversal bar to protect yourself. And then if you get any, and this is the one thing that we didn't talk about was the potential exit, Craig. One of the biggest mistakes that people make on the momentum trade is it's momentum that gets you in. It's the strong triggers that get you in. It's all that giddy up that gets you in. And if momentum gets you in, then loss of momentum should get you out. So a reversal bar becomes a little loss of momentum. Divergence becomes a loss of momentum, or simply reaching your key areas. Being a little more aggressive on the momentum style trades is typically how those need to be managed. But I think you absolutely nailed it. Great job. And then Joel, odds favorable? Absolutely. 50-50 trade, right? We're coming from a termination, everything's up. 78.41 has the potential to break, but it hasn't. And this is such a good lesson on this one, and I want you to see this. Um, the first one has no divergence, right? Your first pullback has no divergence. Your large and synthetics are tighter on one another. You've got a very small window of opportunity to take a shot at this area breaking. And then when divergence prints, um, and look at the weakness, look at the weakness, you've already sacrificed a clear path because both triggers aren't on the other side. And now we're sacrificing momentum as well. And I say that we're sacrificing because if I don't have momentum and I don't have a clear path, it becomes apparent after a little time with the software that you're literally giving away two of the most important advantages, right? And it becomes more of a hope trade. You'll also notice that the trigger lines begin to split and come apart. So there's a lot of things that just didn't go right here. You took a small loss, it's okay. You took a shot at it, it didn't work. Guys, losers are going to happen, right? You're going to make little tactical mistakes. Sometimes they're going to work, sometimes they're not. But if you revolve everything around advantages, if you revolve everything about what's good, um, then it makes it easier for you to identify what's potentially bad. And this is a great example of that. Nice segue, right? Termination, full reversal, odds favorable. And Gino knows that he has trouble here. Gino's very well aware that he's coming into support, and he takes a quick little shot at it. And it's a very low risk shot. It's a 4-tick shot to try and break the area, and it doesn't work. He gets stopped out. Terminations win. And then, sure enough, when everything comes back up, he says, let's take a second shot with all the momentum. The reaction happened. And I'm not saying trade into support. I'm not saying break your rules and trade into areas that may stop the market. And I think I even told Gino after this, is that when you know what you're up against, it makes it easier to do this. And if you're gauging advantages, and I want you to see the advantages, he has the advantage of coming from the terminations, right? Lower divergence, resistance holds. He has the advantage of trading with the trend. He has the advantage of odds favorable momentum. He has the advantage of having had the reaction from support and it pulls back up to the triggers. He has the advantage of the downtrend of the smalls below the synthetics. And then he has the disadvantage. We'll use a shape. He has the disadvantage of this. So what he can do through his chart reading is he can say, I'm willing to take a shot. It's worth $80 to me because with all these divergences in the same location, with everything below this resistance, there's a likelihood that the market continues down. And I'm not sure what crude oil did after that. I know how to find out though. Because it was this morning, and that was it right there. And that was that tactical, and it goes right next to the key area, right? But you made a decision based on trigger lines, based on direction, based on where it was coming, based on the strength and the momentum. Strong triggers break things to take that trade. Is it a high probability trend trade? Well, it can't be because the advantage of a clear path is gone because we're not trading from areas. But guys, this is chart reading 101. This is gauging your advantages, weighing them against the disadvantages, and making a choice that suits your needs, making a choice that fits your pain tolerances. And I think that it was a great trade. I was looking at the shorts too. And then we've got Cav, where everything says down, and he gets a pullback right to resistance inside of favorable large triggers, and he makes money. And it looks like he made some money on something before that as well. Guys, this is the kind of trade that I steal. This is the kind of trade that I steal his link, and I come to my spreadsheet and I put it into my spreadsheet because Cav did it perfect. This is a perfect high probability trend trade short. It makes sense that I would come back and study this and look at this and look at the advantages. Small's below the large, right? The large are wide, everything's down. There's absolutely nothing in the way. And there's a beautiful entry right there at resistance, right inside of favorable large triggers. Cav, I don't think you could have done this one any better. This is everything that we teach every day. And Cav just put on a clinic. Nice job. Then who's next? Alan, let's see what you got, my friend. Alan says medium probability trend trade. He did have odds favorable. He didn't have a clear path. He didn't have an area for entry, and it's not a good top, but you did have divergence. This brain fart in the trade. First entry was wrong direction. So you went long and then short and had your stop inside of the window. That's tough. Large chart won though, didn't it? Everything said down. It just kind of danced a little bit. One, two, three divergences, pushes it up higher. Then it tries to go down. That's a tough one, Alan. That's a great look on the first one. If you were in right here at the mid band, and then just getting in later kind of got you. So why no short and why longs, right? Against momentum, against all sorts of stuff. Did you just form an opinion that the market should go up at the mid band, so you took it? Long was key error. That's okay. It happens, right? It happens. Great example of why we don't fight direction or momentum, though. Good job, Alan. I've seen you trade. I don't worry about you. And then Safia. Safia says, when everything rolls, I'm going to go long. And when it looks even better, I'm going to go long again. And she's going to take it off at the trouble spot. Nice trading, Safia. When the shorts no longer work and it heads the other direction, Safia takes a shot at it. That one fits your rules. It just wanted to dance a little bit beneath it. Good look. I like that look. That's your one-to-ones. That's the triggers up. That's the pull back to them. That's momentum. They just had that little dance. No, D-Rock, she's taking a different look. She's taking momentum. She's using momentum on the charts. I don't know what your 50-50 means, Safia. I still have absolutely no idea what 50-50 means for you. You created a new trade. Um, the short got stopped out. It was a great looking short, right? So D-Rock, what she does is she takes momentum indicators and just tries to go with the immediate momentum, right? That's really all it is. It's the first advantage. Safia's built a plan around the advantage of momentum, and it's amazing at how effective it can be. But you got to figure your patterns out, and I'm literally awestruck by the amount of study that she's put into it, the amount of questions that she's asked, the pictures that she's posted. And I'll tell you guys right now, Safia has shown me just as many losers as she has winners, and that's what got her where she wanted to be. Outstanding student. And then Cav, termination, look at the roll, getting in on the pullback to the large and synthetic with the smalls above, making money. Terminations for the win, right? Terminations for the win. So, guys, this is next level for you guys that are kind of brand new with me. GW, SPX Trader, and even, Craig, Big Game, welcome to the family. The idea that terminations can stop the market is huge. The idea that a termination can set you up for an opportunity the other direction, you just got to get your bearings down. Once you have a good understanding, you'll begin to create expectations based on patterns. And it's amazing how many more trades are available. And this is essentially the same thing. That's crude oil right at a termination condition. I'm not sure where your entry was. I mean, I know that it was 59. I don't know if it was the pullback or the spike up, but that certainly is a good look, Derek. Once again, termination. Smalls get above the large. Um, Curious why you have three sets of triggers. Taking the software and making it yours, I suppose, right? That's a lot of trigger lines. These giant behemoths would scare the hell out of me. Because you're on the wrong side of those monsters. And I'm sure that there's something that I'm not seeing there. That's the cool thing is it's all yours. Doesn't have to be mine. Must have clicked something. Um, so 13.2, let me, if you want to go load template, go to templates, load. You're looking for 13.2 Rinko 2023. Um, I'm not sure which one you did, but that's the one that you're looking for. And you can load it up on a chart that's already doing its thing. And for some of my cruel oil traders, when everything finally says up, there's your potential breakout. When the triggers get above resistance, it acts as support. It pulls right back to support inside of favorable large triggers. That's what it looks like when you break out of a range. How we doing, guys? How we feeling? New users, talk to me. Don't be quiet on the sidelines. GW, does it feel like you're drinking from a fire hose right now? SPX trader, it probably does. You're probably like, holy shit, this is a lot. It gets better. Gets better every day. Gets easier every day. I promise it does. It's repetition, guys. Everything is designed for repetition. Paul says termination, not going short. Nice job, Paul. I think we saw that one earlier. David Bout says that he thought it was a good idea. It is a lot for now, SPX. I want you to be very comfortable asking questions. If you need a little help, a little guidance, let me know. Nice job, Safia. Um, David, are you with me? I'm looking. You say odds favorable momentum down, right? But you went long? I see your entry. Or are you going short? Oh, here you went short. Here you went long. So we're looking at the short trade. Okay. So you do have momentum, right? Termination condition all day long. You went long here and closed out. I actually like the long because of the support, because of the position of the triggers. It's a little aggressive, but this long, if you could weed this long out and maybe weed that short out. Are you familiar with the gap theory, David? Have we talked about that in terms of termination conditions? So let's talk about it real quick because this is a great lesson for everybody. The gap theory, here's the clever picture. If price pulls away from the large triggers really fast and smacks into an area, price is likely to snap back to the triggers. That's really all it says, but let me show you the example because I watched it happen live. Um, and this is it right here. If price accelerates away from those large triggers, and guys, you can see how we're not coming from an area, it's not a strong top, and it smacks into Fibonacci support. Does everybody see the location of the large triggers? How there's room for an entire bar to get back to it? This is the gap theory, David. And this is why, that's why this long trade didn't scare me, because when you reach Fibonacci support and your triggers are a full bar away, there really is an opportunity to trade back to those triggers. It doesn't always work. It's a lower probability trade. But that reversal bar says, let's go close the gap. And what happens a lot is when this doesn't come from a fib, price accelerates and the triggers don't follow, you get that continuation up to the next key area. So your short trade is caught in a vacuum because if the expectation is that price, good morning PFI, if the expectation is that price has the potential to close that gap, pretty much any short trade in there, even with the triggers, even with the direction, rule number 2 should have kept you out, but the gap theory just kind of reinforces you don't want that trade. It's a low probability trade, and you'll see it if it reaches a mid band and the triggers are a full bar away. If you reach fibs and the triggers are a full bar away, And very often, there it is again. The termination condition was that giant blue line on your fib or on your chart. David. But see how rule number 2 keeps you out of the shorts. And this is one of those things, as you grow with the software, there may be opportunities to take it up to that next key area. And sure enough, that market continued right above, right through. Smalls above the large are wide. They're angled in the direction of the trend. So now what are we doing? Now we're just hoping for a pullback to an area of support inside of favorable large triggers. Why is that a sell stop? Do you see how quickly that read happens, guys? Odds favorable, clear path. If I get a reversal bar right now, there's the top of my triggers, there's the bottom of my triggers. There's my highest point of support in the mid-band. There's my lowest point of support, Fibonacci. Look at how small that window of opportunity is. Look at how concise that point where the market is likely to bounce becomes. Can you guys give me a Y in the room if you're with me? This is what we teach every morning. This is the look that I talk about every morning, guys. This is the one, and if you focus on this initially, this is the one that sets you up for long-term success. This is the one that sets you up for being a chart reader. The trend is up. The momentum is up. The path is clear. All I need is that small crowd to do their thing. Push it back. And notice it, support, support, mid-band, all the triggers. I mean, gosh, this is beautiful. And then here's the next question. If we get our entry, where are we putting targets, guys? Where are we looking to get to? Can you identify? And then crude oil. Smalls above the large are above the areas. The pullback was to support inside of favorable large triggers. Let's move the circle. And there it is, right on the tail. Pretty awesome, right? NASDAQ had a little weaker triggers, but a clear path. So guys, the idea is that we can study this look over and over, that we can practice it. Craig, there was your trade, right? With all the momentum, break up, stab back, go. And then there was your loss of momentum, so maybe you manage out of that one. And now we look for the pullback. Now we look for the high probability. Sophia loves your trade, Craig. With all the momentum as things break through, snap back. Nice job, Sophia. Here it comes. Oh, this is exciting. This is where the nerves kick in, guys. This is where you start saying to yourself, oh, I hope it gets me. Uh-oh, it's starting to form an up bar. I think maybe I should jump out. Maybe I should jump in, right? Guys, I also want to talk about one of the common things that I get from users is, but Mark, there's no room to get to the fib, right? There's no room to get to the fib. Look at that tiny little space. How can anybody make money in that tiny little space? Well, this is why I remind you, this is why we buy a pullback. You go from a point of possibility to 6.5 points of possibility, right? If it does what it's supposed to do, if it does what the market typically does, we're giving ourselves tons of room to get to that next fib. And sometimes the market's a jerk. It doesn't mean the party's over, guys. Remember that small chart is nothing more than fluctuations. Small chart is a tiny little glimpse of what's happening inside of this one bar. And you'll get these ups and downs. And we'll see what happens. And then D-Rock, did you take it to the fib? Show us a picture. Alan, show us a picture. Guys, I think one of the great things you're holding, one of the great things about Nexgen, with all that momentum, Your next one's off into the distance, isn't it? I think one of the cool things, guys, is that if you are brand new, you get to see actual people, right? You get to see actual users using the software. You get to see people that started in the same place you were looking for it. And then, Paul, you bet that little divergence pushes it back to get us to the mid band. You think a loss of momentum is a nice recipe for pushing things lower? That's just a chart read, isn't it? Look at how concise that window is. Pretty awesome. And then Alan says, all you have to do is study. All you have to do is ask questions. And if you do, termination, full reversal, odds favorable, clear path. Look at his entry, ladies and gentlemen. Beautiful. Easiest $300 you'll make today, right, Alan? Nicely done. Thank you, Kiss Plan. It works. All you have to do is learn how to work it. You guys have the best hammer in the world. You just got to learn how to swing it so you can build something cool. That's all it is. And what happens if it reaches a fib before it reaches the entry? Trades off the table. But that's the process. D-Rock says, with all the momentum, let it giddy up. Everything is above support. The triggers are still up. No reason to go short, right? Guys, what do you want to talk about? We're watching these high probability trend trades work. We're watching people getting paid real time with high probability trend trades. What do you need to become one of those people? What's it going to take? I try to do everything simple. I really do. I try to keep it as basic as possible. I want to remind you guys that want to be there yesterday, you people that want to be professional traders before your chart readers, there's a process. And these are numbered one, two, three, four, guys. The first thing you have to be able to do is recognize and commit to trading with the direction of the market. If your background is green on your large chart, look for long trades. Look to follow that trend that's been established by the people that move the market. If it's red, look for down. This is the easiest lesson that you're ever going to get. So GW, SPX, uptrend or downtrend, what do you suppose? Jose, I'm sorry that you left because we talked about this one. We talked about the fact that you had odds favorable, nothing in the way, perfect entry, and then Alan came in behind you, Jose, and posted the exact same trade. This is that 20%. And then you posted a winner after that looked just like it. And I spent a little time telling you that it was a great job. The market gave it back after it took away. That's a beautiful trade, Jose. And then, so Craig, on crude oil right now, price bars are above the triggers. Does that mean it's slowing momentum? Nope. So momentum, watch this. Let me get everything off of this chart except trigger lines, Craig. I don't want you to overthink it. Momentum is separation between the small and large. Momentum, see how nothing agrees and the market goes sideways a little bit? That's momentum. That's a loss of momentum. I think there's one off in the distance. This is momentum. This is momentum. This is momentum waning. So don't get caught up on the bars, Craig. Focus on your trigger lines. And remember that momentum is established on the large chart. The overall look, the overall momentum happens on the large chart. I just took all my fibs off. Hold on, D-Rock. For now. I like it. Don't get sucked into the small chart if the large chart doesn't say go. But do you see how strong the triggers are on the large chart? I've got 80-14, D-Rock. So momentum is up, right? Direction is up. This area has the potential to break, but it hasn't broken yet because my large triggers are below it. So D-Rock, you have to create an exit reason, right? You have to, what's it going to take to get you out of the trade? You don't have to tell me. I'm just saying when you're in these holdings, how are you going to do it? Is the term far enough away? For what, David? Is it far enough away to make some money? Looks like it. But do you notice how you didn't, well, you never got a reversal bar. So you're hopping in on momentum, which means that if you lose momentum, you've got to reconsider some things, right? But you do have a clear path, you have momentum, you're getting in on momentum, and absolutely there's room to the red line, but all your targets are beyond. 68 to 76. Are you willing to take a trade for 80 bucks? Let me show you how Allen took this one. Allen took the pullback to support inside of favorable large triggers, and he had tons of room to get to that area. You did too. You just can't expect a home run when the fib's that close. Nice trade. Whole bunch of momentum. And then Paul, is this the S&P or gold? This is the S&P. They did pull back to an area of support inside of favorable large triggers. And then Dwight's S&P, you're waiting for them. Is this right for inside the triggers? Yep, absolutely, man. From the top of the triggers to the bottom of the triggers, the areas within. Absolutely picture perfect. And then Paul shows you the entry. The first one didn't make it. Some of you guys got frustrated and quit. Those of you that stuck with it and stuck to the rules, I believe Paul said, it did everything it was supposed to do. Right back to support, right inside of favorable large triggers, and it made it right to the fib. Can I get like an amen or a hallelujah or a yeehaw? Does it work? Damn right it works. And if you can't work it yet, that's okay. I'm going to be here with you to make sure that you can. But guys, this is live. This isn't me making stuff up to look cool. This is literally odds favorable momentum, clear path, pull back to support inside a favorable large triggers, and out at the fib. And Paul, correct me if I'm wrong. You had virtually no risk on this trade and every advantage. Outstanding. Outstanding. Guys, I can't make it up. Only one tick against you, and then it went to the price. So, Dwight, show me where your entry was. Here you're above the midband. Did you not adjust it as the midband came up? Did you leave it in the same spot? Remember, guys, a tick or two above support, a tick or two above. Don't trip over pennies trying to catch dollars. And then on crude, pull back to support inside. Nice trade, Cav. Taking that quick money, right? You're anticipating the breakout. Perfect entry, tiny risk. You're like, I'll get out of trouble. Great trading. Learned your lesson from yesterday? No reason to hold on for the home run every trade. The same way. I like to get paid. And then crude oil just hasn't stopped yet, have they? Crude oil still has odds favorable momentum. Crude oil is breaking through the area. So if I were holding on this particular trade, I would have to be able to determine where the market shouldn't go, right? So with all this momentum, if I get a pullback, I've got a window of opportunity for a potential long, don't I? Whoops. And where is that window of opportunity? That window of opportunity extends from that fib really to this midband. So if you were in the trade and you said to yourself, I'm not willing to get out of it, kind of have to put a stop where the market shouldn't go, right? David, I think that's brilliant. Look at this. That's perfect. That's smart. And then, so David, if rule number 3 is your challenge, remember, okay, so D-Rock, now you have a 50-50 with one divergence. You'll have to decide whether or not that fits your rules for continuation. So David, if you're having challenges with rule number 3, the easiest way to fix that, I think, personally, there's 2 ways. The first one is start clicking on these links and look at the 2 charts together. Look at the relationship of the entry and the large chart and just kind of put them into your brain when the advantages are present, right? And then practice them. Go back and circle tails in the live market, or go back and circle tails. Reversal bar, top of the window, bottom of the window, and just kind of go through, but start showing, like just focus on entries. Don't worry about being in all the trades. Scroll back historically. Open up your large chart and circle tails when the rules are met. And what you'll realize is, look at this, guys. Circle tail. Where's my next 100% high probability trend trade? There wasn't one. I'll tell you what, it wouldn't do any good at all, David. I'm sitting next to you right now. I can't tell you when to trade. They throw me in jail and fine me for that. But do you guys see that? This is a high probability trend trade. This is odds favorable momentum. This is no termination conditions. This is a pullback to support inside of favorable large triggers. If I scroll back, that's it for today. There was one of the absolute best of the best trades today. But here's the second half of that is once you learn how to catch this one, and once you're a chart reader, well, then this one finds its way into the mix. And this one, where the areas break and it pulls back to it, finds itself in the mix. And this one, where areas break and it pulls back to it, find their way into the mix. So you go from one opportunity, oh, that's high probability trend trade. Sorry, you go from 2 opportunities to maybe 5, 6, 7 opportunities where those medium probability trades present themselves, and you can learn to manage them. And it's really pretty cool how it works, guys. There's a termination condition on the NASDAQ. No reason to try to the long. There's a termination on the S&P. No reason. You know what, David? I'll tell you a true story. I draw when I trade. Um, I either pull out my iPad or I pull out my sketch pad, but I sit around and I draw when I trade, and I sketch, and it doesn't have to be anything. Sometimes I draw 10,000 circles. But what I do is I keep my brain from fixating on the charts, and by doing that for me, it keeps me from fabricating. It keeps me from trying to enter trades where there aren't trades. It keeps me from trying to get into the market and keep busy because I'm not busy in the market. So I get this opportunity where I can just kind of sit around and I draw, and my drawings help keep me focused on doing nothing when there's nothing to do. Some people play video games. Some people just listen to reggae music. I know my brother does that. Um, so whatever works for you, right? Your mind works fast. Mine too. Mine doesn't like to sit still. I do not like to sit still at all. So watch this. Let me show you something pretty cool, right? I come to my large chart. My trend is up. I'm looking for strong triggers to the upside. I have strong triggers to the upside, but I reach resistance and no trigger lines broke through. I'm done. That's it. Stop looking. Don't try to make things happen, right? Yeah, exactly. Don't try to make something happen. Don't try to create something that isn't there. If you look at your charts and your rules aren't met on the large chart, sit on your hands. If you look at your large chart and there's nothing for you to do, sit on your hands. Relax. Do nothing. Do anything other. So Cav, 50-50 with divergence, right? There's no divergence on the 5-1. That's a good safeguard. Notice that it also says divergence, no trade. Notice that it also says if divergence prints, exit the trade. There's a reason, my friend. And this move is getting tired. It had to break this, it had to break this, it had to break this. This divergence let me know that that's not my best chance of success. Does that make sense, Cav? And what's it doing? Pushing lower. Guys, I love 50-50 trades. I really do. I think areas with the potential to break are outstanding, but let me show you when they're the most effective. Cav, they're the most effective when your termination condition is close. Sure did, Ron. But that one didn't. 50-50s work best when your termination condition is close. The further out you get from whatever reversed the market, the more difficult it becomes to break through areas. Because, guys, moves get exhausted. Buyers get tired of buying and sellers get tired of selling. And profits get taken along the way. So the further from the origin you get, moves just start to slow down, guys. There's a termination that created a full reversal. There's a full reversal that gave me odds favorable momentum. No reason to go long up here. Odds favorable momentum, smalls are through the areas, larger not, 50-50, right? Gave one back. Paul, you took that last one? It's true though, Alan. There's just a point where shit gets tired. Pardon my French. Yeah, Paul, 50-50, divergence, right? Guys, I love 50-50s. I really do. But I like a 50-50 on this line, so close to it. All the way out here, this good bottom, it's already done its job. It's already pushed it up. Now things are just getting tired. And you see it. Divergence, divergence, divergence. You see that there's a struggle on the way up. And I don't think it's a bad trade. I just think it's a little lower probability. Probably not mine. Termination, tons of momentum, and there's your 50-50, right? That's up to you, Cav. I have a plan that says if divergence prints, exit the trade. And I think this is one of the things as we get into these trades and we're married to them instantly, right? This is my trade, I'm going long. This is my trade, I'm going short. This is my trade, hell or high water. I'm going to get stopped out. I'm not going to adjust mid-trade. So actually, I appreciate that you put that. So yeah, why not? So check this out. And let me show you the difference, right? Um, let's rewind a little bit to Paul's amazing long trade. So look at this. Odds favorable, clear path, perfect entry, right? Cav, come and get me, right? Come get my stop. There's no way in hell I'm moving it. Does that make sense? Everything is perfect. No way I'm moving my stop. They have to come get me. Area is not broken. Divergence is printed. Man, why on earth would I commit for 12 ticks? Especially when my window of opportunity ends right here, right? The mid band's not even inside anymore. If it doesn't bounce off the mid band, to hell with that one. I don't want it. Does that make sense, Cav? When it's perfect, they have to come get my stop, right? This isn't perfect. This is odds favorable. This is not a clear path. There's my window of opportunity, right? But the area is not broken. If I got short right here, my stop. Oh, I don't have an ATM strategy. Hold on. If I get short right here, that's as far as I'm willing to let it go, right? That is as far as I'm willing to let it go, because if it goes outside of these triggers, that's not my trade. It's not a perfect trade. I don't have a clear path, and I don't have a clear path on 1, 2 areas. So I'm going to manage assertively. It's this bar either has to go down from right here inside of the window, or I just don't want it. Does that make sense? I'm not putting my stop at full stop. I'm not putting it all the way up here because, good Lord, if it goes all the way up here, I'm so far out. Why on earth would I want to risk any more than that? This is not the perfect trade. This is not a clear path. It does have momentum, right? But it's not what I look for. It's not my best of the best. Or I wait for the reversal bar on the correct side of the triggers, right? I give myself some fighting chance. NASDAQ's a different animals. So you've lost more of these than you've won, you said? I did too. That's how this came to be. You guys don't realize this. The checklist was designed because people lost chasing everything, right? The simple plan was designed because people lose more than they win. And the 50-50 trade is one of the biggest killers because it allows you to be active. It allows you to trade more. It allows you to get into the market more than just waiting for high probability trend trades. And I was the same way. So what I did is I said, what's the absolute best way to take one of these? And let's look at it because I don't think anybody's really looked at it, right? Can everybody see what that says? One area not broken. One area. Why? Because how many areas are you going to try and convince the market it needs to break? This is for the brand new user. So if I have 3 fibs, let me see if there's an example. If I have 2 areas not broken, it doesn't fit my plan. And look what's happening. That's the first thing. Why hope on multiple areas? There'll be times where it's appropriate. But for the new user, if you just stick to that, it's going to eliminate half the 50-50s. Making sure. Well, so Cav, we can ask the software to do what it can't do, or we could train you that if you're on a 50-50, right, divergence prints on the third bar, which means that if you have an area inside that a third bar can't even get to, all you have to do is say, hey, you know what? That's not my area. What if divergence prints? Because then it breaks my rules. Does that make sense? If your reversal bar gets you to the area in question, it doesn't work for me, and that's one of those things that you'll do. If you know that divergence printing is a factor in whether or not you'll enter the market, doesn't it make sense to wait to see if it prints rather than jumping in and hoping that it does not? Cool little lesson going on here. I like it. Um, for the brand new user, for the easy stuff, guys, no divergence on the 5-1. And I say this because divergence is a killer. If you already don't have a clear path, divergence means that you're losing momentum. And if you're losing momentum, well, then you're giving away two of the three. And granted, it's not large chart momentum, but the small chart shows change first. Um, are you coming from a good top or bottom? Is it a termination condition that creates a full reversal? If it is, remember that fibs are where people react, right? They're where buyers buy and sellers sell. If it's coming from one of those key points in the market, the likelihood of it going through the area goes up. So this was added to the easy way to get in. As you grow with the software, as you mature a little bit, I can tell you guys right now, if I have a good top or bottom, I might be willing to forfeit the one divergence. One divergence. If I have a good top or bottom, it may change my approach, right? But if I don't have a good top or bottom, I'm insistent on the no divergence. And then here I put in one more time, just, hey, divergence, no trade. Divergence, no trade. If there is divergence, I'm not taking the trade. And then Paul, this is the S&P. Those one-to-ones, it looks like price reached them. Missed them by one tick. Okay. Odds favorable, just about there. Perfect entry. Risk is appropriate. It tapped it and then came and got you. I'm sure those one-to-ones had something to do with it. Good stuff. And Phil, we all love Steve here. Um, I'm not sure how John feels about posting other people's indicators in the next gen room. I don't want you to get upset. I'm going to delete it because I'm not sure what the rules are. But I don't want John to come in and go, dude, why are you letting him post stuff? And I know that Steve has a huge history with Nexgen and he's a great guy. Um, I just don't want to get myself in trouble if I didn't moderate properly. And it's probably not a big deal. But I don't want to just do it and go, because that's not an moment. Steve's a rock star. So, um, back to the KISS plan, right? Phil's a rock star too. Back to the KISS plan, guys. Just keep it easy, right? Keep it focused. Here's your gap theory again, guys. Price accelerates, reaches the area of support. Large triggers are a full bar away. And D-Rock, you said that you held longer than you should have. I agree. But let's see what you did. Beautiful entry, awesome target. And then, yeah, you took the profit, which is great. And it hit the outer band and formed the HVA. One of the things that I do, D-Rock, and I'm certainly not saying that you have to do what I do, because I don't always do it perfect. But if this is my area that I have to break, what I might do if I'm big in a move, right? I'll say I got this reversal bar where it broke and it gave me the momentum style. that's probably as much as I'm willing to give up at that point. Um, because it gave a momentum trade, right? So at this point, and this is just my line of thinking, this is a trend trade, and I love it, right? And then it set up the perfect momentum trade. Are you comfortable enough with the concept that that's a potential trade with all the momentum? So momentum in, loss of momentum out, and it gives you this great opportunity. It's almost like your management strategy changes a little bit, right? Because the trend trade exit is at the fib. And since you're holding, it becomes a momentum trade trying to break that fib. And exactly like you said, when that divergence prints, you're probably out right there. It's an awesome trade, dude. And I love that you gave it a shot. And I like that you're developing your management plan. That's pretty cool to watch. And we're not going short yet, right? And this isn't a termination condition. Can't we agree that there's the potential right now, guys, that it closes the gap to those large triggers? And if it does, we have to make a decision. David Bout, that was your long earlier, and I'm not saying that it's a long, but that's the one you took. And we just have to eliminate those shorts too. Not going long either? I wouldn't. My plan doesn't suggest a long, but my plan definitely says that a short is financial suicide. Nice to see you in here, Snorri. So, guys, I think that taking a break is a big part of what you should do. Rest your brain, rest your eyes. Whoops. It's a term. Amen. Go stretch your legs, guys. Breathe through your eyelids. Do whatever you need to do, but stop staring at the screen for just a second unless you're in a trade. I'll be back in about 5 minutes and we're going to finish strong. Guys, I want to open up the last hour, especially to you guys that are newer, that have questions, that are just getting started. Please ask away. I find that the last hour can be the most incredible hour if you guys get vocal. So think about what you want to talk about. When I come back, we'll talk about it. Back in just a minute, guys. Back. So, Cav, you posted. I bet some of the new users are wondering how to take emotion out of the equation. Do you want to know how to do it? You guys want the secret? I don't usually hold out on you, but I'm going to do it right now. I'm going to tell you exactly how to take emotion out of the equation. You guys have your pens ready? Can you hear me? When you take trades that you believe in, when you take trades where you trust the rules 100%, when you take trades that you have proven to yourself have a statistical advantage, I can tell you right now, if you take those trades enough, if you record those trades enough, if you have a basis where you know with absolutely no uncertainty that these trades win more than they lose, the emotion's out. Guys, I can tell you right now, I take emotionless trades very often. But let's go to the other side of it. Cav, the real question, and I'm going to apologize to you guys with sensitive ears, is how do I stop myself from doing stupid shit? Because that's where the emotion comes in. How do you squash your desire to be active? How do you squash your desire to be in every move instead of the good moves? And guys, that's one of those things. I can tell you that my coach told me, eventually, Mark, you'll get so sick of losing that you'll stop breaking rules. Eventually, you'll get so tired of getting your butt kicked that you're gonna stop, right? Um, and guys, I've had days, and I kid you not, and I'm not proud of this. I've had days where I've woken up and taken the wrong trade 5 times in a row, and dropped almost an instant $1,500 in my account. And what happens is I take the wrong trade, right? And then once I take the wrong trade, um, that changes to, and let me see if I can find a good example of it. Let's get the drawings off of this. I'm gonna show you something that's pretty common. Um, and guys, if you figure out how to admit it, how to omit it 100%, let me know. We all have. So check this out. And let me know if this seems familiar to anybody. Um, Triggers are down and it says down, right? So you say there's no divergence. I'm going to get in right here. Anyone ever done this? Does this look familiar? I'm going to get in at the mid band. Even though it doesn't fit my rules, I'm going to do this. And then when this one doesn't work, you're like, but everything's red and I'm freaking brilliant. I'm going to get in when it hits the triggers. Don't have an area, but I'm going to do it anyway. And then you get stopped out and you're like, so this is two indetermination conditions. You're like, well, they owe me and I'm going to go short right here because, you know, screw those guys. Has anyone ever done this where you're like, ouch, dang it, dope, and you blow out for the day when all you had to do is follow rule number 2? I've done it. I've done it. You did it today? Guys, everybody's done it. So how do you eliminate these, right? Um, you eliminate those when you catch this one. Because when you catch this one, you don't want to give it back. Yeah, definitely not stupid. Nobody's stupid. We're just human. Thanks, Joel. So how do I get emotion out of the equation? You can trade emotionless by trusting your plan. How do you stick to your plan? For everybody, it's different, right? For everybody, it's different. There you go. I like that, Cav. It's a great song. You have to memorize and stick with it. Unless you're my wife, she changes the lyrics on everything and then blames them for getting them wrong. So guys, it's just repetition. Can I tell you, I've done this long enough. Do you guys know what the one common thread is between the most successful people I know that trade? Is that's pretty much what their plan looks like. And it doesn't have to be a high probability trend trade, but if you took a successful trader's plan and you put it on one piece of paper, watch this. So this is, and let me get it so you can see the whole thing. I want you to see something. This is the KISS plan. I can take that out, right? Guys, that is 2/3 of a piece of paper. That's everything that you need on 2/3 of a piece of paper, and that's in bold print. That's 12 font bold print, double spaced. If I space it like a normal human, guys, that's half a page. Is there anybody in this room that doesn't think they could learn a plan that's only half a page long? This covers management and entry for two different trades, guys. Let it be this simple. Let this be your path. And you're going to have to fight yourself to commit to it because it's not going to set up all the time. But I think that this gives you a great idea, and let me make it so that you can see a whole piece of paper here. And sorry that it's going to be so small, but that's it, guys. That's one piece of paper. That's as big as the plan is. I find the people that win the most look for the least amount of opportunities. They look for strong triggers, right? They look for a clear path. Some of them wait for the back of the bar to clear the trouble area before it hits the next area. There's a million ways to do this, guys. You just have to find the one that works for you. You have to find the one that fits your pain tolerances. Um, I've been working with my brother a lot lately, and we've been working on the best looks. And what we find, and maybe this is weird, most of our conversations, because we're so good at identifying advantages, most of our conversations now are how to avoid that one trade that's tempting and always gets you. So, Cav 50-50 with no divergence, right? These get you guys all the time. Or 50-50 with one divergence. So you start going through these and you identify what's kicking your butt and start working on a plan to keep it from kicking your butt. I did that with NASDAQ. I know I've got NASDAQ traders in here, right? I blew out 7 Apex accounts trying to learn to trade the NASDAQ. And then I started going through the same plan that I tell you guys to go through. I started taking pictures. I started seeking help from my brother, the same way you guys could seek help from me. I started only 7. Yeah. Learning to trade it. Show me a picture, D-Rock. Three divergences still in play. Can we keep it simple? Can we keep it super simple on whether or not divergences are still in play? Let me show you just a simple recipe for it. You ready? Boom. Let me find it. All right, D-Rock. Let me take a picture of my picture here. And let me turn this into a divergence high line. Did you, DL? I'm sorry. Yikes. Hopefully you learned something from it. Um, and it sucks. I've done it. Revenge trading. I've done it. It goes back to this one, right? That's my short. Oh, it lost. Well, then that's my short. Well, then that's my short. I got chewed up in the NASDAQ the other day, and my brother posted this picture. He sent it to me. It was hilarious. I'm going to find it for you guys. Um, and I think it was a picture he made, or maybe somebody made it in Discord and thought it was kind of funny. I think it was kind of funny. Sometimes the rules just aren't met, right? Sometimes it's not the best looks. Here we go. This is my life, guys. This was during class. Yay, wee, fun stuff. Awesome. And now Mark gets out of class and it's time to trade. And this is what the market does. After watching you guys make money all day long, that's hard to sit through. It really is. And some days you get chewed up. I did. So D-Rock, I'm sorry, I total digression. Um, Divergence high, right? If the triggers don't break it, it's in play. If the triggers break it, it's not. Really pretty simple. So if we go to crude oil, this divergence, out of play. This divergence, maybe not, right? Let the triggers break it. And unfortunately, we're back into the termination condition. But let the triggers break, and let's see if we can find an example where these two are out of play because everything got above them. So that's your first divergence. It just happens to be at a 50-50. Um, this divergence line is out of play until notice that it breaks and then comes back. I'm looking for an example. This divergence is out of play once everything gets below it, once it breaks. So yeah, that's what I do, and it helps a lot. And then, of course, we're right into that termination condition, right? Right into that termination condition. And then divergence from the fib just adds fuel to the fire that shorts feel like a bad idea. And then there's that 50-50. You've already had one. There's two divergences on the 50-50. Does it look like they're getting stuck a little bit, guys? 50-50 doesn't work. 50-50 doesn't work. 50-50, couple divergences on the brink of probably not working. Can we define some ranges and say, hey, I want to see it get beyond this for me to take a shot at it? And then Paul, you took the short. Man, it's one tick off, right? Wait for divergence rather than break even. Any reason to get out, break even once you missed your target? Um, no, I don't think so. When this HVA line prints at the outer band, that's pretty significant if you're going to add in the market flow. Um, but yeah, there's nothing glaringly obvious. Two divergences doesn't kill it. Stop is appropriate. Snorri, I gauge my entries on the large chart. I gauge my entries on the small chart. I have begun to use market flow and John Novak, the stuff that he's teaching now. Let me see if I can find a picture of one of mine. I don't know if I have one anywhere. I have started using the market flow chart for holding for bigger moves. Um, and it's everything that John Novak is going to be teaching. Let me see if I can find it. To give you an idea, I'll give you guys a glimpse into what he's going to be doing for you guys that take his next level class. It is essentially Was there some art in there? Maybe. It's essentially when you take your entry, I'll use a market flow with what he calls super fast triggers to hold for bigger moves. Um, so this is your entry. It lines up with the large chart. It lines up with all of that. But when I'm in the move, I'll use a market flow chart. When everything is up and strong, you get a lot of patterns where it's one down, back up, one down, back up, one down, back up. And I'll use this for stops on the way up. And this is what John's going to be teaching, and it's pretty outstanding. Um, and that's the only way I incorporate it. I don't incorporate it for confirmation. I'll use it to make sure that I'm on the right side of things. And to be honest with you, Snorri, I don't know it well enough to teach it. I'm just now incorporating it. So my entries are still 100% large chart, small chart based. But once I'm in, I'll begin to incorporate it in for holding for bigger moves. Oh, there is art. I was like, what are you talking about, Ron? Yeah, for those of you that don't know, this is what I do when I'm not teaching you guys. I draw in people. It's a pretty cool. Nice when your hobbies make money. Great question. Story, I hope that was helpful. It's so on the NASDAQ, it's just a 21 range chart, and I believe you have the template for the super triggers on there. But it's an opportunity to hold for larger moves. And I don't even have them on NinjaTrader 7. And then sometimes the market tries to tempt you to break your rules. Hey, look, termination condition. It's no worries. Give it a go. But look at the momentum that led the way. What do you guys want to talk about? We're on a 50-50. Let's see if this one works. Weak triggers, right at a fib, divergence prints. What do you guys think? Likely to continue up? Smalls are below the large are pinching and rolling. Large chart says up, right? Large chart says support has the potential to hold. Small chart says change may be happening. Maybe. Or maybe a long if it rockets up from support with all the triggers and I end up with a clear path. What's it been doing? So we'll see, huh? This is a defining spot. This is very much a hurry up and wait spot. I'm not going long, but I'm definitely not going short, right? With all my triggers above an area. I don't have the NASDAQ up, but Gary is probably referencing the similarities between the NASDAQ and the ES, right? I can tell you, Gary, that's gotten me in trouble, though. I've taken some trades I shouldn't take because the other market said. NASDAQ's going down, 50-50. But NASDAQ went from a pivot stop out to support to resistance to support. 1, 2, 3 divergences. Let's use a basic lesson. Trigger lines above or below Fibonacci support. Everything's above, right? Shorts are silly. Divergence from a fib, weak triggers. Longs are silly. So where's the advantage? Is it advantage up or advantage down, or is there no advantage? I'm telling you guys, if you speak in terms of advantages, it really does create a little bit of clarity. Is there anything that you would bet your wife's wedding ring on here? No. But right now, there's a devil on your shoulder saying, Cav, if you go short here, man, and it wins, dude, look at how far it's going to run. Hey, Cav, if you go long and it breaks, oh, dude, right? That's the part that we have to squash. Dang it. But that's the part that we have to squash. That part of our body that knows that if we win a trade where it didn't have an advantage, that we believe that the world is going to hoist us up and put it on its shoulders, and children will sing songs about you. DJ, it has nothing to do with bars. Has nothing to do with bars. Bars are just price, right? That's all it is. So DJ, when when price reaches a fib, price reaches a fib. This is where decisions get made. And look what happened. Boom, there's a bounce, right? Kaplow. When price reaches the fib, then we let the trigger lines tell us whether or not that fib is expected to hold, likely to break. So it becomes a really simple process, and it doesn't have to be, and it has nothing to do with the bars, because you'll see bars that'll get through, but if the triggers don't, then we still anticipate that area to hold, right? The bars got through up here, but see how the triggers didn't? And look at the reaction. So it's very much price reaches, and then we ditch price and we look at triggers, and triggers will let us know. Um, when price reaches resistance and the triggers are below, we can sit on our hands. When the small and the large get above, we can look for a trade. And there it is, right? So let the triggers lead the way. Price initiates the response from the people in control. When it reaches the area, the trigger lines will let you know if it has a chance of breaking or holding. Does that make sense? Awesome. And then Luciano, you're looking at the PSO. Um, so pivot stop outs on a large chart, Luciano. Whoops. Woo. That was all 10 days of my data. Sorry, guys. Pivot stop outs on a large chart can end the trend, right? And Cav, I am invincible. 10 feet tall and bulletproof. Pivot stop outs are a termination. How do they work on the small charts? Well, that's a can of worms. But let's see if we can find some examples from the spreadsheet. And I'll go to chart reading. Let me find pivot stop out for continuation. One of the ways that we can use pivot stop outs, Luciano, on a small chart is creating expectations. And we jokingly called this the Pineski for a long time. So this picture assumes that the large chart is down, the large chart is strong, the large chart says go, right? And we get this pivot stop out as we look for a short trade. These two divergences, this pivot stop out here, typically creates a pivot stop out here if the large chart is going to win. Sure, Safia. You too. Appreciate you being here. So you see this a lot, Luciano, on the small charts. When the large chart says go, the large chart says strong, the large chart says nothing in the way, and you get a pivot stop out here, very often it takes out the previous pivot before continuation. So what does that mean? You can use pivot stop outs if I still have an area inside of favorable large triggers that lines up with that previous pivot. This becomes my most likely spot for entry if it's going to continue. Does that make sense, Luciano? That's awesome, Safia. Congratulations. Now just keep doing what you're doing. So what you'll find, and let's see if we can find some examples of it. And sometimes it's not just pivot stop outs, Luciano. Two divergences. Paul called this one earlier. Second divergence takes out the previous pivot. That takeout happens right at support inside of favorable large triggers. And let's see if we can find more examples. Pivot stop out here, pushes it lower, doesn't really follow the pattern. Not a lot of pivot stop outs on the small chart. That was right at news. That doesn't count. Pivot stop out here, Luciano. This is kind of neat. It gives you the expectation that it's likely to take out this pivot, which keeps you from trying to get in short too soon. This divergence pushes up. So I would study it, but very often a pivot stop out, when the large chart is screaming, creates a pivot stop out. But it's not guaranteed. I just use them for terminations on the large chart. And then Cav, is it top step trading or take profit trading is what it is. Take profit trading. It's just another prop firm. So take profit trader is what some of the cool kids are using. Um, and it's a funding firm the same way Apex or anything else is. It costs a little bit more to get in, but the drawdowns are a little bit different, I think. The testing, all sorts of stuff. Just another prop firm. Different rules in Apex. Here's the deal. If you trade consistently and win more than you lose, it doesn't matter who you're with. That's the recipe. All right, newer folks, how are we doing? I see a lot of people had to go off and run their companies. No worries. Charmin, are you in here? No. GW? Not GWC, but GW. How'd we do today? Day one's a lot, I know. It gets better, it gets easier. You're the class guinea pig? Love it, Sophia. How do we feel about a termination condition on the NASDAQ? Gary called that one 20 minutes ago. You learn a lot from Sophia? Me too, David. Me too. I've never claimed to be the smartest guy in the room, but the one thing I'm good at is reading indicators. And once you learn how to read indicators, things kind of fall into place. You find your groove, you find your mojo, you find what works, and if you only focus on what works, it becomes easier to not focus on the things that don't. Thank you for that, Sophia. I like what I do. I very much like what I do. I enjoy teaching. It's a kick for me to be a part of y'all's life and a part of your journey. So I enjoy it. All right, guys, we're getting quiet in here. Does anybody want to talk about anything? Does everybody know what they're looking for in a trade? Does everybody know what it's going to take to get you in? Maybe termination conditions keep you out, right? Look at that, 50-50, 50-50. NASDAQ's just kind of bouncing, guys. It knows that I'm almost done with the class. It's like, hey, let's get in a range real quick before Mark sets up his charts. And it happens. Getting better at trading CL. I love it, D. Will. Hey, you are cordially invited, D. Will, to show me pictures of what you're doing, to ask me questions, to take up as much of my time is you're capable of taking up to make sure that you get even better faster. I was so hesitant as a new user to post in my brother's class because I didn't want to take time from other people because I didn't want to be wrong in front of a crowd. And I'm telling you, once I started doing it, life got good. Crude oil. What does why here mean but not here? Oh, why is the one-to-one here but not here, David? Awesome, Charles. It's great to have you. Well, what does the large chart do, David? You set this up on purpose, didn't you? You're like, let's let Mark reiterate a lesson. Remember that your large chart leads the way, right? It defines direction, momentum, and areas. So one-to-ones on your large chart are definitely areas, right? What a great spot to take profits. The reason that it's not on the small chart, David, is because one-to-ones, whoops, I'm going to go to the glossary of common terms here so we can look at it. So one-to-ones come to be based on swings. So your large chart had these swings that it measured, and when it did, it created those yellow one-to-ones. They're 100% Fibonacci alternates. I don't know what that means, but what I do know is that when they print, it can be a termination condition. So, but this is on the large time frame. And then the other one, where's the picture you showed me? Sorry. A smaller chart is going to have smaller swings, right? It's going to have different swings. It's going to have different pivots because we get that movement inside of the, like we see inside of the large chart. So just because a one-to-one prints on the small chart doesn't mean it's going to be on the large chart, and vice versa. I can't find a one-to-one. Same reason that a divergence on the large chart may not show up on the small chart. They're just different time frames. And we use them differently. The large chart is going to define direction, momentum, the areas. The small chart, it's just an entry chart, brother. That's it. Does that make sense? So check it out. There's those large chart one-to-ones, right? Look at the bounce. Look at that little fluctuation on the small chart. So you knew because of the large chart weak triggers nothing through that that's a great exit. Use the large chart. Nope. I use the large chart, David, to tell me when it's time to look for an entry. I let the large chart tell me when I have odds favorable momentum. I let the large chart tell me when I have room to my area. I use the small chart for entry. So hypothetically, if I am in right here at the pullback to resistance, let's say that I take this trade, right? And I hold through the first fib and I hold through the second fib because look at the momentum. Look at the triggers when I get to these one-to-ones. Isn't that a great look to get paid? And the only thing I did was trade a pullback to resistance on the smaller, faster chart. This is what I use the small chart for, to get in. And then the only thing that gets me out, as long as I've got a clear path, is potentially 3 divergences until I hit an area. Does that make sense? Large chart says go. Small chart execution is execution of the go. What you got, Dano? Did that make sense, David? So you were in an awesome looking short, right? But when it hit these one-to-ones, that's exactly where we expected it to go to, especially with the weakening triggers. It gives you an opportunity to get out as close to the trouble as possible. Dano, do you have a picture? And now terminations creating the roll, right? As they do. There it is. Now I've got it. Odds favorable. I do consider them all. Absolutely, Dano. So as a general rule of thumb, three divergences can stop a trend. That's the basic. Can we take this in levels? Are you okay with that? In general, three divergences terminate the trend. But let's look at something. Where are the small triggers in relationship to the large triggers? It's still odds favorable momentum, right? So I'm coupling this momentum with this momentum. Dude, that's crazy strong. There's times when I'll ignore three. This is probably the look that'll have me ignoring three. Notice that the small triggers don't work their way inside. Notice that they're descending, not ascending. And you're coming on crazy. So as a general rule of thumb, because I've got to start simple first, this look right here may terminate a trend. But it's that all magical word that kills the black and white people. It may terminate a trend. Eventually, you become such a great chart reader, Dano, that you know that when these three divergences print, but the large chart is screaming to the downside, there's a better chance of them breaking than stopping that market cold. How was that? Was that a good answer? It all goes back to chart reading, but it's odds favorable momentum, right? And look at it over here. Now it starts to weaken with a second divergence, but it's only two because we've already broken the previous three. And sure enough, with all of this momentum, it still pushes down. Momentum for the win, guys. Rule number one is awesome for getting you on the right side of things. Rule number one is awesome for having you trade in the direction. And then when you have rule number one, when you have the best of the best trigger look, guys, it gives you a little wiggle room on some other things. And I keep it very black and white for new users because it's easier that way, right? Um, Absolutely, Cav, you too. And then once you get through it, once you start reading charts, once you start recognizing patterns, then you start to take those concepts and turn them into bigger and better opportunities, right? So over here, I've got a 50-50, and I've got a 50-50 with divergence, and I've got a 50-50 with divergence from one-to-ones. D-Rock, have a good one, man. I hope the weather's nice for you guys. I know you got some rain coming that way. My kids were telling me about it. See how it compounds? I don't have a clear path, and I have a loss of momentum. You just start giving away advantages. Didn't have strong triggers, losing momentum, no reason to go long. Directly into support, no triggers through, no reason to go short. Let's hurry up and wait, guys. And then crude oil, weak triggers at one-to-ones, doing everything that we thought it would do. So, guys, that's it for me today. I hope you learned something. I hope you had fun. I hope you realize that it doesn't have to be intimidating or stressful. Just keep it simple. Work your way through the challenges by presenting in class. Awesome, Joel. Every time you do something, every time you see something, just show it to me. We'll talk about it. It doesn't have to be a trade that you took. It can be something on the chart the way Dano did it. So thank you for that, Dano. Probably a great lesson for a lot of people. I'll be back tomorrow morning at 9 a.m. We're going to do it again. I'm going to do it every day with you until you get to where you want to be. So Charles, welcome to the room. GW, welcome to the room. Um, I'll see you guys in the morning. Take care, everybody. You guys be good.